That's right, ladies and gentlemen. We're all sitting here doing our happy dance as I scroll on over into my stock portfolio today, looking at Tesla up 52.29%. People are losing their marbles, but it leads to question, is it perhaps time to start taking some profits off the table, or should we sit tight and hold on? Before we answer these questions, I want you to sit tight as we step back in time.
To open at lows not seen since late 2016 as Morgan Stanley cuts its worst case scenario for the automaker shares to $10 a share, arguing that they've essentially saturated the market for retail EVs and are too big really to support anything but the fundamentals at this point. And then you've got Tesla above 500 for the first time.
Yeah, I mean, we spent a lot of time just now with Jim talking on the Mad Dash about Tesla and about that increase in price target at Oppenheimer. But the stock's gone almost parabolic at this point.
It should, because we were supposed to be worried about the balance sheet. If you have $10 per share, what the heck? Who cares about the balance sheet? That's never talked about. And my daughter loves the flatulent seat. She kept sitting on it, pressing the button. I mean, I know it's a little odd, but Tesla is the place. It's the third place to be. People love to be in it. And they've got autonomous driving. Oh, my, it's so exciting.
Drop it.
Welcome back, my passive income investors, to the 2020 Happy Dance, because anybody that held on to their Tesla shares are looking at some pretty absurd capital gains. The market cap is just about to cross over $100 billion. That's right, I said that right, ladies and gentlemen, $100 billion. And today I'm going to share with you whether I'm going to consider leveraging some of my shares down, perhaps in the macro here, but I'm going to get into that in a second here. But taking a look at the stock in and of itself, the reason I love companies like this is because you don't have to throw a rock too far to listen to the bull and the bear cases. Just scrolling through the forums comes absolute hilarity, and I love the memes that have been popping up left, right, and center. But taking a look at the actual stock as of today, guys, we just crossed 24 million shares traded, making this some extreme volatile stuff. But it's crazy to think that most of these people have been gobbling up shares, pushing the stock even higher. It seems to hold every dip that it takes. Now, looking at some of the bull cases, as I'm sure there's no bigger bull out there than Catherine Wood. And she said on Tuesday that she believes Tesla could be worth more than $6,000 per share. To keep that in mind, that would put my average shares somewhere worth around $100,000 combined, which is a little bit staggering to consider.
So innovation is key to growth means we're not talking about growth by cutting costs or by leveraging up to buy back shares, which is financial engineering, and which is ruining companies like GE and IBM and most of the blue chip stocks of old.
But I want to go over a few more things and some stuff that's a little bit swept under the rug that most people aren't paying attention to with Tesla, which I would like to consider is their solar panels. We keep forgetting Tesla has all these little cherries that they can put on top of their income cake that I think we're going to start seeing come into fruition over the next year or two.
And I actually know, I have solar, so I know exactly how much I would be benefiting. I'm saving about $100 a month or so on my bill. And if I'm paying $50 to Tesla, I'm coming out $50 ahead. Right. So right off the bat, it's like no investment, no upfront costs. You don't have to worry about it. And that's always the biggest complaint about solar is how expensive it is to go into it and needing subsidies and incentives. And there's a lot of people that really, really hate subsidies. It's like this takes that all out of that equation. It's like you want to get a cheaper bill and go green with your energy as best you can. This rental program is a fantastic way for anybody to step into it at a very, very low cost and start saving from day one. It's just an absolutely incredible product.
Those business model disruptions that they've taken a model, and they're not making new panels or more efficient panels, but they're changing the way we think about how you pay for them. And It's pretty amazing.
This basically turns them into a legitimate electric company in a way. It's like a distributed electric company. It's like a virtual power plant.
Now, a lot of people are paying so close attention to the recent launch of obviously the Gigafactory in China. They have one coming up in Europe, and they're finally becoming at scale with the other auto manufacturers out there that are trying to keep up with Tesla. Because I mean, Ford, GM, they're all losing revenue numbers, which we're going to take a look at in a second. But where my bull case really lies on this, and I've mentioned this before, and I'm just going to bring it up again, is the fact that it's all about automation. One of my favorite things to do right now is play with the numbers of Tesla's future potential, whether the regulators allow it or not. So long as they can prove self-driving is even capable, it's going to send the stock into the atmosphere. But more importantly, if you take a look at Uber or Lyft, they take about 20 to 25% of the bottom line when it comes to these Uber drivers working for Uber or Lyft, going out driving, collecting those fares. And the fun thing to do is kind of analyze how Tesla could take over this position if it does come into fruition. Heck, let's presume 200,000 of those cars are going to be out on the road producing an income, and let's say Tesla takes $3 a trip, giving the rest of it to the person that owns the vehicle. Well, that would be bringing in them roughly about $600,000, which doesn't sound like a lot, but presume that's per trip per car. And let's presume each car is maybe doing about 10 trips a day. These numbers start getting absolutely absurd. As we can see, that jumps the number to 6 million. And this is so bloody conservative. It's not even funny here. And that's just for one day. Now let's presume that's happening every day for an entire year, 365 days to a year. We're looking at $2.1 billion, ladies and gentlemen. Did I even say that right? Holy, these numbers are hard to look at. This is what I like to do when I'm playing around with the math behind Tesla's future potential and revenue. But taking a look at their actual revenue as it stands today, from 2016 to 2018, I mean, revenues have over almost tripled, quadrupled, and hopefully they'll be able to continue moving forward with this as new parts of their company come online. And we can just see here, guys, when it comes to a growth company, we can't really compare it with earnings. Most bears out there are fighting this so desperately because of the bottom line. Earnings are nil. They're constantly bleeding billions of dollars, hundreds of millions, and they're starting to work it out as we head into the future. But because this company is in a new industry, and a lot of people think it's not, that's why they keep comparing it to other automakers. But in my opinion, being in a completely brand new industry, this thing will potentially be an Amazon of the future, which I still think, honestly, where the stock price currently sits, in the macro, I think we're looking at slight overvaluation. But in the long term, guys, this could still continue to go higher.
I got to tell you, I'm dumbfounded too. Dumbfounded that Tesla stock hasn't gone even higher. Why? Because the stock market loves growth, and this market in particular can't get enough of it. This is a chart of growth, people. Tesla has growth in spades. Of course, investors will pay up for it. GM has barely any growth. Ford's actually shrinking. Nobody wants to pay up for stagnation. Plus, Tesla's got a rapidly expanding business in China, which is all the more impressive when you consider that Ford's China business is in big trouble.
Now, where do I see Tesla stock going from here? Am I planning on selling some of my position? Well, not really, guys. I mean, in the macro, I think we're starting to reach overvalued territory here with the current fundamentals that exist. But at the same time, I still think this company over the next 3 to 5 years has some crazy potential behind it. And I think most of us as shareholders are holding it based on that future potential. When I was buying this, a lot of people were telling me that I might be overpaying in the macro, but I told them in perspective to the years that may come, I would rather overpay now than, wait for the next blimp downwards. And again, define where the value sits in this company, because I was saying that anywhere between $2 to under that $500 mark, you should probably be picking up shares. And I got criticized heavily for that, but now it looks like I'm not exactly that wrong, which obviously there was some gambling to those words because nobody really knows how the stock market's going to perform. And I think a lot of people are holding on to this company, hopefully on those base fundamentals that, like Catherine Wood says, could push it into the $4,000 to $6,000 range if you are a long-term investor. But in the macro aspect of things, I honestly think we could start seeing some pullback sometime soon, going into the near, 3 to 6 month future here. I just can't see the stock pushing much higher than maybe touching that $600 top. I think we're going to see it play between the $400 to $600 range for the foreseeable macro, and then heading into the long term when news starts coming up. And I honestly think we're going to see news from many sectors of that company. I mean, we're still talking batteries and what the evolution going on in the battery production and manufacturing. I mean, we're talking about the solar panels and the wall batteries. I mean, all of this stuff brings this company into a realm where it just doesn't have any competitors. And until competitors really start stepping up, this thing is going to be in its own world. And that's where all the hype is going to continue to pushing this stock even higher. And I'd love to know what you guys think in that comment section below. Are you holding Tesla shares? Do you hate Tesla? And honestly, in the future, guys, I won't probably ever be selling this company. It'll be fun to watch this grow my portfolio, so I hope you stick around for that and consider subscribing. And if you enjoyed this quick breakdown, slap a like, guys. I love making these Tesla videos once in a while. I know they're not dividend related, but I honestly believe in having a nice growth vector in your portfolio. And at this point in time, with the MJ sector being so rocky, with Bitcoin being so rocky, this one really warms my heart, considering the amount of bears that were beating me up. And I went against the grain, and it's finally paying off, ladies and gentlemen. And remember, I've been here since the first big dip. I mean, I was buying Tesla back in the 2018s here, and I'm glad that I held on. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.